Hello, everyone. I hope you are doing well. So today, I'm going to share with you a setup which occurs very often also, and which is very powerful. So I've already talked about, the internal range setup, the range within the range. I've made 2 videos about it. And in this video, you will see 2 kinds of setup. One setup, which I've already talked about in previous video. So this setup, now we are talking about the big range, So this setup, you take all the internal liquidity on the sell side, and then the internal liquidity on the buy side. And then this is what I expect, since more than a week now. I've already told you in my reviews that I expected this buy side to be taken. And then probably I would expect a sell. And if I'm wrong, this high gets taken. But in my view, and this is my opinion, I think we will take this internal liquidity and then we will make a shift and take this sell side. But this is speculation, okay? This is not a real analysis, on a day-to-day basis. So this is one kind of setup which you can see on every time frame, okay? So generally, this type of setups occurs when the market wants to change the trend, the market structure, after we have taken important liquidity. So you see on the daily, we have taken all this internal liquidity, okay, from this range, from high to low, we have taken all this liquidity, okay, and we have mitigated an important area, which is a breaker for sell. And you see, most people wants to buy inside this order block, and they expect that it makes a new high. So now, that's why I'm expecting, such type of setup, okay, to occur. So this setup is called, for me, I call it the internal fuck up, because it first takes the internal liquidity on the sell side. So most buyers get trapped, and then most people want to sell, okay? And then they get trapped on the other side. And so it takes both internal liquidities before making its move. That's why I call it the internal fuck up. So now this is one setup which I share with you. And now the setup of the day, of today, is another one. It's not the same thing, okay? And I think I've already talked about it to you. So as I said, this is the target, the buy-side liquidity, okay? So until this buy-side liquidity is taken, mainly I will be looking for buys. So you see there has been one selling day on Friday, but that doesn't mean that it will not continue to buy after, okay? Let's look on the daily quickly. Why Friday has been a sell? So here we have retested the breaker, as I have explained in my last video. And as you can see, there is a little fair value gap, okay, on the daily. So you see it has been quite slow okay? Otherwise, we would have taken the buy side without making the pullback. But as you can see, on Friday, it didn't want to go up again. So it means it wants to take liquidity or to rebalance before going up again. And so we came to rebalance this fair value gap on the daily on Friday and the Monday morning. So on Monday morning, you could expect a buy, okay, which occurred, and it's either you caught it, you know, or you could wait forever for a pullback. So I will talk also about a third setup. So this setup, I call it the manipulation before 8, you know, like an Asia manipulation for me. And so I will just put 6 a.m. Okay, 6 a.m. Why 6 a.m.? Because it is a New York opening, okay? Midnight New York opening. And so the day yesterday, day starts. So we have made, you see, it looks like a spring, and you know, this is a reversal pattern, but as you can see, okay, here we have a shift in market structure. Very clear shift. This is not like fake price action. This is going straight down, taking the liquidity, and then we shift. After that, we induce people to sell, you know, and I don't trade before 8, so I wait for 8 opening. Okay, it makes a move up, and then boom, it induces people to sell. BOS down. Okay, but if you know how I am trading, so this would be considered as an intermediate term low because it has a short-term low on the left and a short-term low on the right. And it rebalanced this fair value gap and took all the sell side, the internal sell side liquidity. Okay, sell side liquidity, internal. So intermediate term low, short-term low, intermediate term low. Now, you could snipe below this, you know, after this BOS has been made, but I always prefer to wait for confirmation. And here you have fair value gap, okay? A very slight retest, but it's still a retest, okay? So even if you missed the entry there, you could, you know, wait, I don't know. I mean, you have seen that it has retested, you can catch it, you know, from there or at the close or whatever, you know. It's not too late. I mean, you are not at 1 or 2 pips, you know, you are at least aiming for 20 pips. So if you are 2 pips late, 3 pips late, it's okay. It's not too much, you know. It's not like 10 pips or, you know. So yeah, you are under 10 pips, you know, stop loss. So it's good. And of course, you can aim, yeah, so you see 46 pips, but yeah, you could aim for at least, yeah, this liquidity, which is clear, 26 pips, okay? And then if you want really to catch most of the liquidity, you could aim, yeah, for this beautiful order block right there, 100 pips. But as you can see, usually I don't wait for that much, you know, I close before. So I can wait maybe, you know, until the 9 opening. No, no, where is 9 opening? Yeah, right there. Usually at London Open, I close, because we never know if there is manipulation or so. Yeah, 20 pips. I would have probably closed right there. Okay. So intermediate term low, first entries, and you could enter again right there. Second entry, and up to 3 entry. Okay, and third entry right there. And then you can wait. You just wait. Okay. As you can see, there was not many opportunity. There was no, pullback that could make you buy or whatever. It's either you cash it or you let it go. Okay. And so today, the setup of today. So you have seen this setup is manipulation before, this happens usually when you come at a key area, on a daily, on hours, hourly, When you are in a key area, you don't need to wait for an external sell side liquidity to be taken or whatever. No, you just wait for a clear shift and then you take the trade, okay? Here it was messy. So most people wouldn't buy, especially when you have such traps, where people could buy from there, boom, stop loss taken, and then it goes, It will not come back to this order block. It shouldn't come back to this order block. Okay? It's either people snipe from there or, you trade from fair value gaps. So that was, sorry. That was the trade from yesterday. Now let's look at the trade of today. What is happening right there? I don't know. Okay. So today, start of the day, 8. Perfect. Today it was very clear, very clean. You couldn't miss that. So this is another setup which I like very much. Very, very much. And if you are not seeing it right there, probably you didn't watch enough of my videos. So this is what I call the accumulating buy or sell plus the new range, so I will call it accumulating sell in this case plus new range. By new range, I mean a clear range when you can see at least one beautiful, usually it's 2 order blocks, the one which take the liquidity and the one which start the move, okay? And people will trade inside this order block, okay? So in the 15-minute, it's very clear, okay? You have 2 beautiful order blocks, okay, unmitigated. And you can see it also on the 5-minute. And you remember our bias is buy, okay? You remember the bias is buy for multiple reasons. First, because we aim for the buy side liquidity, which is a 4-hour candle which broke the structure, okay? And here we also made like a kind of a break of structure, you could tell, people will be selling inside this. BOS, because people won't snipe right from it, they will wait first for a break of structure. So here we go, we can say this is a break of structure in the retail SMC, and again, in this break of structure, you have a 15-minute order block which started the move, okay? Because here we have taken the stop losses of other order blocks, okay? Here we have the 15-minute order block which started the move and also produced a third BOS. So, you know, when there is 3 BOS, it's free, you know? This is also a kind of pattern which I like. And this is why you could buy easily yesterday, okay? And so let's come back to the 5-minute and to our beautiful range. You see, anyone, so this range is hard to define maybe, you know? You don't know if you should define from there, you know, or if it is a break from there to there, you know? But here, the range is clear from high to low. This is the high which has taken these lows, okay? And you have two beautiful order blocks. You can refine this one if you want, which becomes a breaker right after, okay? Boom, breaker, boom, okay? And I don't know why, but my indicators disappeared, you know, the imbalance indicators. Up. Okay. So yeah, you can see we rebalance with the breaker and boom, we continue. Here we rebalance again, we continue. So let's talk about the entry. Now you have this beautiful range. You wait for the 8th opening, okay? You have the accumulation and you have the new range. Inside this range, you want to look for a clear shift in market structure. So while this could have been a shift, personally, I was not sure, okay? I was still hesitating because this is a little fair value gap and we have made a new high. And you know, this kind of stuff I don't really like. And here there was no fair value gap rebalance. If there was a fair value gap rebalance right there, I would have taken it from there. And here, even though we have a BOS, it doesn't mitigate any order block on the left, okay? However, now we have this short-term low, okay? This could be intermediate term low, okay? At which condition? At the condition it makes a new high with displacement, with a fair value gap. And it does make displacement for value gap. Sorry, for value gap, okay? And you trade from there. Okay, now you have your intermediate term low, which is formed, which give you a safe stop loss position, and you aim at least for this, but as you can see, it's only 10 pips. So you can aim for maybe there, okay, 20 pips, 21 pips. Or you could aim, you say, okay, today we will take, you could aim for this one or so. Okay, 28 pips, it's enough. Or you could aim for the whole, you say, okay, today we will take this buy side liquidity because we have rebalanced already the daily fair value gap. We have made a big push, so I expect it to continue and take the buy side. Okay, but personally, I have taken my profits right there. Okay, once we have taken this, I have closed my trade. Okay, it was pretty fast. So now, if you miss this entry, Okay, you say you missed this entry. What happens next? We rebalance again fully the fair value gap, and boom, again, okay, we form another fair value gap. You could enter right there. Okay, this was your last entry in this range. Okay, now that we have taken this liquidity, it's more dangerous to trade from there. Okay, I wouldn't trade from there personally. And you can be, if you are aiming for more profits, which you should, because 10 pips, it's very low, you know, and you should be break even. Okay, if you have taken a trade from there, you are break even now, because it shouldn't come back to there, because now we have made a BOS. Okay, and people will be induced to buy from this order block or from this one, you know. It shouldn't come back there. But as I mentioned, you have the breaker. Okay, if you want to continue, you have this breaker plus fair value gap. I wouldn't trade right from it. I would wait for, as I said, it's too dangerous to trade directly from the fair value gaps. I would wait for intermediate term low forming and another fair value gap entry. But here again, we have made multiple fair value gaps, and it's quite clear that it's going up. However, look, here you have a beautiful order block at the top of the range, which most people would sell from there. Okay, so you wait for like a little price action which will induce people to sell, and you see up BOS, kind of BOS stuff. What I tell you most often, when you have many fair value gaps, okay, you put a FIBO, you take the one which is below 0.5. Okay, so this is liquidity below 0.5. You take something, anything which comes after this, and you see what comes after. Very beautiful. Look, this is what I call the most powerful shift in market structure, and it comes with a little fair value gap. What does this mean? Okay, this means this is intermediate term low. Now you have a safe entry. Here you couldn't just buy straight from there. It was not safe. Okay, now this is safe entry, because people are induced to sell in this order block. Okay, no one is induced to buy because there is no break of structure yet. Okay, so you buy from there, stop loss below, and you aim for the next target. So this one maybe. Okay, so this is the second opportunity for the day. Now there is a third one at the same level. Okay, so here people again are induced to buy, especially in this order block, because this is the one which broke the structure. Okay, and this order block mitigated this one, I think. Yeah, so now this is the only valid of our order block, unless you want to trade this one and this one. Okay, and so now we have taken all the internal liquidity, this one, and this one. Okay, again, this was short-term low. So here your stop loss is safe. If you have traded from there, you didn't take profit, you can keep your stop loss right there. And now you can expect this to become the new intermediate term law. But we need first fair value gap. This could have been like the most powerful shift also, but as I tell, I like when there is fair value gap here, on the buy side, but there is no fair value gap. So you could wait for the SMS type 1, If you don't know about the SMS I'm talking about, please refer to the educational videos talking about the different types of shift in market structure or the most powerful shift, So yeah, here, SMS type 1, it occurs, you trade from this fair value gap, okay? Sorry, fair value gap. Okay, so this was the third opportunity of entry, and as you can see, 7 pips stop loss and 30 pips TP in 10 minutes. 10 minutes only, you book your TP. When there is a big candle like that, personally, I close, After I mean, if this candle happened here, I wouldn't close. But now we have already made many pushes. And after a big candle like that, I can expect a big pullback also, even though I want this to be taken. I won't take the risk of a big pullback for 3 pips, okay? This is really not worth. Imagine now you are waiting, right there, just for 3 pips. Is it worth to wait 1 hour, more than 1 hour for 3 pips? No, it's not worth. Okay. So, yeah, mostly I explained 3 setups. So you remember the first one, at the end of a range, sorry. So let's say you are in a bullish range, okay, and then boom, you have this kind of range when there is sell side liquidity, and then you form some buy side liquidity, you take the sell side, and then boom, I expect this sell side to be taken, okay, and you look for an entry above for sell. So this is what I am expecting on the 4 hour, This is the first setup, which I called the internal fuck up, okay? I will write it down. Internal fuck up. Okay. Now, the other setup I talked about is the New York manipulation before 8. So this is not like a setup which you can draw, I think, but yeah, let's say you come into a fair value gap area, okay? Let's draw it like this, or below an important liquidity. So yeah, you just wait. Oh, you just wait for SMS, which occurs before 8. Let's say you have your New York opening, okay? New York open. New York open. Okay. And so you try to take a trade which comes below, even though you can have a little fair value gap right there, and boom. Okay. So this is the what I call New York manipulation before 8 Paris time. Paris time, I precise because maybe there are new viewers, you know, who doesn't know about my trading schedule. And the third setup, which I talked about, is the accumulation plus new range. So accumulation or accumulating, buy or sell plus new range. Okay, so in this one, so I will draw both the buy and the sell accumulation. So in this one, you have kind of accumulation buy and a very clean, you know, range. And you are trying to find a sell at the top of the range. But it can also, what it can do is it can come to this area just to trick people to buy, and then boom, you know. And stop losses below. Once you break this, you should put break even. And on the sell side, okay, can do the same. Okay, beautiful 2 order blocks. Okay, you can either try to buy from there or wait for something like this and buy. But you can also buy, you know, from the bottom. Doesn't matter. Okay, so those are the 3 setups which I talked about. I think this one is kind of tricky to see, to be honest. But this one is a simple setup. You can see, everyone can see it. To be honest, this one, everyone can see it. Okay? So take note of this one. This one is tricky. You have to have a certain experience, a certain view of the market to see it, because you need to have a certain expectation. You know, you arrive to this area, you know it will go up before you can see this, okay? If you are not sure about the direction, you cannot see it. And this one is important also. You can take note of this one also. This one, remember, it happens generally after a big push, after you reach a certain area, you know, above a buy side or sell side liquidity, or when you have reached a certain fair value gap, you know. And this one can occur also in lower time frame. Okay, I have already talked about this one. I don't remember which which video it was, but I remember I talked about this setup for sure. Even this one, I think I talked about. This one, I didn't talk about this one because it is tricky to see. And so, yeah. And this is why yesterday I didn't catch it, you know. This one is easy to see. When I woke up this morning, you know, for me it was crystal clear, you know. When I saw this beautiful fair value gaps, I knew, okay, buy for sure. Accumulation, new range, buy. And you know, my bias was already buy, you know, so this is only a confirmation. So yeah, that's it for today. I think the video is gonna be a bit more longer, but yeah, this is very important. Hopefully you have taken notes of certain setups and you will see them occur on your chart. So thanks for watching, and yeah, see you next time.